Joining us, Max Keiser. Max, so much is happening. I hope that your bold prediction is not true, but unfortunately, it looks like we're creeping towards the eve of financial collapse. We'll talk about what that collapse will look like as well. Max Keiser.
Hey, Alex. Yeah, well, nice to be on again, and thanks for coming on my show. And I think you describe it well, creeping toward the exits. And this is what the German gold repatriation story is all about. And as you point out, the central banks have lost trust in each other, and they are taking their gold out of banks in respective vaults around the world, and they're bringing it all home. And they're doing this in a way that will precipitate and accelerate this collapse that we've been talking about. And to give you an idea for how this all works, in Britain, for example, the government says they have 300 tons of gold here in Britain. But my sources tell me that they have leased out or sold over 1,000 tons. So we have a fractional gold standard around the world that is keeping these central banks afloat. And now that they all want their gold back, they find out that the gold's not there. Back when Germany took 900 tons from Britain, back during the 2000-2001 period, Gordon Brown, to satisfy Germany's demand for gold to be sent back to Germany at that time, he ended up having to sell 400 tons of Britain's gold. So Britain had to sell 400 tons, and that's about well over $1 trillion now that he gave away, because the price of gold at that time was $250 an ounce. Now it's $1,700 an ounce. And this is a problem going forward. The Netherlands want their gold. Germany wants their gold. China is buying gold. But these central banks that say that they have gold, it's turned out that they actually leased the gold, which is a way for them to put on their books that they still own the gold. When the Fort Knox, for example, when they lease the gold, they claim that is as good as owning the gold itself. But if you were to audit Fort Knox, you would find that most of the gold has been leased, and that means sold. It started really back in 2008, on March 17th of 2008. Stacey Herbert and I, we were making a documentary. We were in Frankfurt, Germany. We were at the Bundesbank, and we were talking to people at the Bundesbank. And this was right when Bear Stearns was collapsing, and gold shot up above $1,000 an ounce. And we ended up there at a very historic moment. And I asked, I'd like to see the gold. And the response from the Bundesbank was, well, most of it is in New York. Now, that film was later broadcast on Al Jazeera English, and it was a shock to the people in Germany. And another journalist named Lars Scholl picked up the ball, and he's been hammering journalists and bankers now every year for 4 years, until the point where Bundesbank came out and said, due to the popular pressure, we have to admit that we have these huge gold positions held in the New York Fed, and we're going to now repatriate this gold. We're taking the gold back. And then my sources tell me that the New York Fed said, well, we don't want you to start a run on the gold market, so we're going to space this out over 7 years. But this was really going back to what we discovered in 2008, which is that the gold that these banks say that they have, they don't have. And this set off a fire, a trigger. Now, over the past 4 or 5 years, what you have is central banks and governments, to keep the economies afloat, have been aggressively buying their own bonds. They call it quantitative easing. And your other guests talk about this, like Gerald Celente talks about this a lot. They buy their own bonds as a way to keep interest rates low or to keep bond prices high. Now, here's an amazing statistic. The bond price in America has not been as high as it is today in the 240 years that America has existed. The bond price, the government bond price in the UK and Britain, has not been this high since 1694, when the Bank of England was created. The bonds are where the dot-com was in 2000. It's where the stock market was in 1987. It's where the real estate market was in 2005. It's at a historic peak, at a bubble peak. Now, whether the bonds collapse between now and April, as I predicted on your show last year, it could happen. I think it could happen. I might be wrong, but I won't be wrong by much. I could be wrong by a few weeks, a few months. But that's what we're going to see. We're going to see bonds collapse. Well, there's a good point you're making there, because it's to contrast today with the 1930s. People say this is similar to 1930s. There's a big difference between now and 1930s. In the 1930s, there was a liquidity problem. Banks needed cash to keep their business going for their deposits. But today, that's not the problem. The problem is an insolvency issue. These big too big to fail banks, they are technically insolvent. They're zombie banks. They're being kept alive with this money printing that the politicians tell us, well, we need to print the money. We don't want to repeat the mistakes of the 1930s. That's false. It's not like the 1930s. It's not a liquidity issue. It's an insolvency issue. And they're keeping the banks alive with this cheap money and 0% interest rates to keep their buddies afloat. And the bond market collapses, as we've talked about, because it's a bubble. It's in a 300-year high bubble. And I look at what's happening in the markets to give me a clue what the big money is doing. And I know that JP Morgan, over the past couple of years, has been developing huge positions, monopoly-like positions in food, copper, industrial metals, and in precious metals. And they're doing so because they know what's coming, that hyperinflation is coming, and they want to be able to totally control that market. For example, JP Morgan just got involved in launching an exchange-traded fund for copper. So that means, and before they did so, they bought something like 20% of the world's copper supply. So now the price of copper is going to start going up aggressively higher because it's being manipulated higher, because JP Morgan and the bankers on Wall Street want to have a new way to make money. It's going to be on commodities. They've made all the money they possibly can over 30 years in the bond market, because the bond market, the interest rate under Paul Volcker got 15 to 16% on the 10-year bond. It hit this huge high on the interest rate. And during the past 30 years, it's now gone down to zero. During that 30-year period, it was the biggest bull market on Wall Street in history, selling bonds and bond-related equities and stocks and options, et cetera. Now that 30-year period is over, and we're going to enter into a period of commodity price appreciation. JP Morgan already knows it. Goldman Sachs already knows it. And they're buying huge positions into these markets. And as far as what's in the U.S., if the price of food gets to a certain level, it causes riots. We know historically that when the price of food gets to around 40% of an individual's income, you look for a riot. That's the point that got to in Egypt before the Egyptians staged a riot, a revolution in their country.
And they don't want us armed so that we can't protect ourselves, but that might actually cause total rioting where even the government gets taken down. But the tyrant's instinct is to disarm us so much they still don't care. But historically, if they take the general public's guns, that will make the government even more unstable.
Right. So in the U.S., the average American spends something in the order of 12 to 15% of their income on food. And it's still, it's not at 40%. But as prices now begin to go up because of the manipulation coming and the collapse of the bond market and the loss of purchasing power from the dollar, you're going to get to the point where the food costs are going to be out of reach for a very, very large percentage of the population. This week in Switzerland, of course, it's Davos. And Davos is really the primo of all the New World Order get-togethers. I think it might even be more influential than the Bilderberg meetings, because here you have in the highest mountain in Switzerland, really the cream of the cream coming together and cutting deals and doing deals. And so it's happening this week. And this is where now we'll find out in a couple of weeks what they decided to do in Davos. And we'll find out what companies got bought and who's going to go after whom. And a lot of news will come out of it. But I think Davos really in Europe is the number one event of the year for these guys, these tyrants like Tim Geithner, who just came out the news that in 2008, 2007, he was selling information to Wall Street about which way the Fed and the Treasury were going to move interest rates. He was alerting the banks through private conversations, essentially selling information, because he'll go to Davos and he'll get paid a lot of money from the folks. That's where the bagmen
They use speeches as a way to get paid off. I remember you on the show.
They show up with bags of money. The Geithner, and they're right there with their bank accounts. He's already got caught cooking the books for his own tax returns a few years ago. So they just go to Davos. That's where they hand him the bag full of money. He can stick it in one of the private banks there, and it's there now for the rest of his life. Davos is where Tim Geithner gets the $20 or $30 million. Just hand it to him in precious metals or diamonds or cash, and he stores it away. That's what they do in Davos. That's what it's there for. That's where the New World Order gets paid. Today is payday for the New World Order in Davos, Switzerland. They worked all year. They got their bonuses. They get them today in Davos, this week in Davos. Buffett gets his big satchel of cash. Geithner gets his satchel of cash. Everyone gets paid this week in Davos. So let the parties flow. Well, I'm just reading Zero Hedge. They got a story up right now. Mervyn King, Bank of England, is talking about rebalancing to avoid a currency war, and that's a big moment because he acknowledges that we're in a currency war. The UK pound is going to have to be revalued down sharply. That means purchasing power in the UK is going to collapse. As you know, I moved to London from Paris to observe and to report on the collapse of the UK pound and the UK economy because it's one of the most vulnerable economies in the world because they have so little gold after Gordon Brown sold most of it back in 2001. So this is another shoe to drop. This is another chapter in the collapse of these paper money empires, and of course gold and silver are acting fantastically well so far this year, and it's just playing out exactly as we said it would over the past couple of years, and 2013 looks to be a continuation.